Luokung. For you, it's been an entire day, but for me, it has been about 10 seconds. And today I'm going to be having a look at the financial side of Luokung. And if you haven't seen my video on what Luokung actually does, I really recommend you actually go and watch that video before you watch this video, because it will explain kind of how it isn't exactly what it appears to be. So without further ado, we are going to get into the financial sides, and we're going to start with the kind of stock side of things. It is trading around $2 and, well, $2 plus per share, and it has a 52-week range of 36 cents to, well, $3.86. Right now, it actually has a market cap of 674 million, give or take, and its earnings per share are minus $1.9 per share, which aren't really that good. If we have a look at the graph for today, it is up for 5 days. According to this graph, it is higher than what it was, but it's still in the red. For 1 month, it is, well, it had quite a high peak, kind of around, well, the end of June, and is now kind of bouncing back from a bit of a dip. 6 months, it's kind of higher than what it was, but yeah, it had a few spikes over this year. 1 year, it's progressively going up somehow. 5 years, it looks like it had a good start and then kind of balanced off for quite a while. And now it's slowly kind of on the increase. This is a 20F form which they filed with the SEC for 2020. I will link this down below if you want to actually have a look at it yourself, but for now I'm just going to kind of focus on the revenue side of things. Here we actually have their revenue. Results of operations for the fiscal year ended December 31st, 2020 compared to the fiscal year ended December 31st, 2019. How did they make their money? Through advertising services, and also through software and services, so licensing their software, which you would think as a technology company, that is where they make most of their money. But apparently not, because when you actually have a look at the revenue for 2020 and 2019, they made the majority of their revenue from advertising. And if this doesn't actually make any sense to you, I will link kind of where I explain what this company does in the top kind of right hand corner, so you can have a look at that and you will understand why this company that is supposedly a innovator in the Internet of Things and also kind of smart cities and autonomous driving makes most of its money through advertising. You will see up above. But yes, for 2020, they made 17, or I'll kind of be nice and round this up, $18 million. Now, this company has a market cap of 673 million. And for the entire year of 2020, it made $18 million, give or take. And most of that revenue came from advertising. They made $69,000 from licensing, and they made $300,000 from their technology services. So their total revenue came to 18,264 for 2020, and for 2019 it was more by about 500,000 or more. If you actually have a look at their advertising as a percentage of their revenue, it was 94.8% for 2019, because they made more money from the technology services then, whereas for 2020 it was 98% of their revenue. So by definition, they are an advertising company. Then we have their cost of revenue, which is quite concerning as well. So traffic acquisition costs. So this could be related to how much they actually pay to get people to view the advertising, which when you actually have a look at this, the traffic acquisition costs for 2020 were 17,236, which if you actually look at as a percentage of their revenue is 94.4%. So out of their total revenue of 18,264, to generate that revenue, they spent 17 million 236, which works out around 94.4%. Now, the previous year was actually better. It worked out to be 72.5%, but that's still not good. It's going in the wrong direction. Another kind of key point I want to look at is their loss for operations for 2020. As a result of the factors described above, which if you want to have a look at yourself, I will link this down below. For the year ended December 31st, 2020, loss from operations amounted to 40,250,000, as compared to a loss from operations of 31 million for the year ended, the year before, an increase of 8.7 million or 27.7%. If you have a look at the net loss for 2020, it was 40 million. And if you have a look at it for, 2019, it was 31 million, which is an increase of around 25.4%. Okay, the final kind of point I want to make is about, their assets and liabilities, which is, as you can imagine, not very good. If you have a look at their total current assets, so for December 31st, 2019, they had 40 million in assets. And for December 31st for 2020, they have around 12 million in assets. But when you actually have a look at their liabilities, for total liabilities, they had for 2019 30 million in liabilities, and for 2020 they had 73 million in liabilities. So for 2019 they actually had about 10 million in surplus. For 2020 they have 61.5 million deficit. That is a big change. It is a change in 1 year of 71.8 million, or 698.6%. So it's not really looking that great for, Luokung. And from what I can tell is the fact that it is hemorrhaging money and it is positioning itself as a kind of more technology company rather than an advertising company. Or there could be a lot of different reasons. Now, in my opinion, please bear in mind that this is just my opinion and kind of my idea on why it could be doing this. When you are looking to generate investor interest and generate cash, it is a lot easier to sell a very futuristic company that is looking to, work on autonomous vehicles, building smarter cities, technology, Internet of Things, all of these kind of keywords kind of trigger investment interest, but the underlying company behind it might not actually be that great. And in this sense, to me, it doesn't look that great. Even if they do own these patents, it doesn't necessarily mean that they're going to be able to develop the technology. So for me, this company seems really risky, and I don't even kind of fully understand what the hell is going on. I don't know if it's trying to position itself as this technology company when it's really an advertising company, or it's just moving from advertising to this kind of more technology company side of things to make itself, adaptable. Now, I do get things wrong, and I may be wrong about this, and if I am wrong about it, then please let me know about it in the description down below. But just so you know, none of this is meant to come across as investing advice. Don't base any buying or selling decisions on the content of this video. Please do extensive research before you buy any company. On that note, I would like to say, if you have enjoyed this video and you have found it informative, then if you wouldn't mind liking this video. And if there's any other companies that you would like me to have a look at, then also comment them down below in the description. Thank you very much for watching. I do hope you have enjoyed, and I will see you next time.